All right, Bulls and Bears, let's talk about this trade deal. Now, I put out a video yesterday, which was Sunday, which was Mother's Day. Happy late Mother's Day to all the mothers out there. If you didn't watch my last video, we have a trade deal, sort of, as I'm recording this. Now, I'm recording this about 11 p.m. Sunday night, and the news that came out today on Sunday came out right around the time I was putting out my video. So I didn't mention it in my last video, and actually it still may not be worth mentioning, but it is in the news. The reason I say that is because there's no hard numbers or data confirmed yet. We don't know the percentages as far as the tariffs, if they have been dropped and how far they've dropped. We don't know the time frame. We don't know which items or goods are going to be a part of these new numbers. And we're told that we're going to hear something today on Monday. So it could be another case like yesterday where as soon as I put this out, we'll hear something right at or right after I put it out. So things could change by the time you're watching this. Keep in mind, I'm recording this as of 11 p.m. on a Sunday night, which is May 11th, and you're probably watching this on the 12th because it's late at night, and I didn't put it out until the morning of the 12th, so of course. But let's talk about what we know as I'm recording this. Keep in mind, it could change. The Treasury Secretary, Scott Bessent, came out and said trade talks in Geneva over the weekend were productive. Okay, that doesn't mean a trade deal is completed, but we'll find out more news today. He said he would give more details in a complete briefing Monday morning. So that could be right as I'm talking right now, or it could mean more like when you're watching this right now. Bessent added, the president is fully informed about the discussions. So he wasn't there, but he was informed. A trade deal with China without giving specifics. So maybe they'll leave it up to the president to say what the specifics are. We'll see how it's going to be announced. While the details of the deal are still unclear, any de-escalation in the ongoing trade war could bring much-needed relief to a global economy that has been roiled since the announcement of these tariffs a couple months ago. Here's the deal, folks. Here's the big picture. We were told that the higher tariffs were going to be the solution to all the problems as far as manufacturing, and it was going to help bring jobs back to the U.S. So think about this. If the high tariffs were the tool or the mechanism or the weapon to bring jobs back, why would we want to have a trade deal? Or will the trade deal be just a lower tariff, which would still incentivize companies to come back to the U.S.? I'm thinking for anything to actually work as far as a trade deal, it would have to be not an elimination of tariffs, but a lowering of tariffs, right? And for that, there would have to be negotiations, of course, on both sides to agree what the tariffs are, what products and goods are going to be exempt, or will anything be exempt, right? We don't know at this point. But for it to be what it's been told it's going to be as far as a tool bringing jobs back to the U.S., it has to be something in that realm. It can't be zero tariffs, otherwise companies would not have any reason to come back to the U.S. All right, so we're going to see how the numbers come out, how the news comes out. Is this fake? We'll have to see. I mean, we've heard a lot of news, and we were given a lot of promises that haven't come to fruition here now more than 3 months into the new administration, going on 4 months. And, so do you expect anything to change as far as how accurate the information is that we're being told? We were told inflation was going to come down. We were told price levels were going to come down. What did we just see just announced recently? We saw this. Used car prices jump to the highest level since 2023. So inflation, maybe slowing, but prices are still going up. Car prices just jumped. We've got China actually sending jobs to different countries, including we've got Venezuela and a couple others here. And also many reports that many other countries are seeing an influx of Chinese manufacturers. Many Chinese factories are moving to different countries, and another big one is Vietnam, due to a combination of factors, including lower labor costs, favorable trade agreements, and the desire to avoid U.S. tariffs on Chinese goods. This trend is fueled by rising labor costs and supply chain disruptions in China. I've got some notes over here, actually, making Vietnam an attractive alternative for manufacturing. So it's interesting that if there really were negotiations happening all along here, and then, of course, at this recent meeting, why would China be so geared towards sending manufacturing to these other countries if there was actually talks going on or negotiations going on, right? So we'll have to see how this plays out, folks, but I don't think it's going to be as good of news as some people had expected, and I'm sure the markets will go up on it. Remember, the stock market's not a gauge of the economy at all. At all. The stock market is a gauge of how well the top 10% are doing, because why? The top 10% own over 90% of all stocks in existence. In existence, right? So anyone saying that the stock market's going up or down is going to be a sign of how well people are doing. Well, a little bit. I mean, a lot of people have wealth tied up in the stock market with their retirement accounts. But when you look at the big picture, folks, it's mostly driven by the top 10%. When they want the market to go down, they'll start selling and they'll send the markets down. When they want to send the markets up, they'll start buying, right? And what we saw was a big pump and dump, right? We saw the markets get pumped up, and then all the talk and news came out of the tariffs, the announcements of those, and we saw the market sell off. And then the same rich people, the same top 10%ers, billionaires, including companies, not just individuals, but companies, that sold off their stocks, they went and bought it at the lows, or at the new lows, or dip, if you want to call it the dip, buying the dip, and pump the market right back up, right? So it's not your mom and pop traders. Typically, it's not your individual working class person. It's the big investment companies and the billionaires doing this, right? So again, not a gauge of the economy, and this is how they make money, folks. They leave the little guy holding the bag when they sell it off. Then the little guy sometimes panics when they see the markets go down, and they'll sell off even more stock, all right? And then, of course, the mega rich, the mega wealthy come in and buy that dip and make a lot of money and push the market back up to new all-time highs. Now, typically, that's how it worked. Now, there's a lot of things in motion right now that could change this entire structure, this entire system of money, finance, economics, right? We've got so many cuts happening right now, and some of these programs, some of these jobs that are being cut, how much of that money was ending up in the stock market, right? We don't know yet, right? We don't know something else. It's kind of like the trade talks, right? We're told that we're saving money, we're cutting spending, we're cutting different programs, we're not sending money to all these different places like we were. We're being told that, but have we seen any evidence? Well, if you look at the debt clock and the level and rate of increase in the debt, none of that's happening. The debt is still rising, and in fact, the debt is accelerating. So looking at the debt levels, just the total U.S. debt, we are not cutting spending, right? So again, things aren't adding up, so I wouldn't believe everything that you read. Even today, if they say numbers came out, here are the numbers, here's the goods, all the details, I really wouldn't believe a lot of what we're being told. But if you want to use this information to trade, I mean, go for it. You can ride the coattails of some of these billionaires that are making money buying and selling, large amounts of stocks and pushing the markets up and down. If you can jump on some of these things, you can make some money. And we did that a couple weeks ago when I saw that big sell-off. Some of us jumped on that. I bought the dip, and I'm up about 18% right now on that. So that's pretty good. It was a buy the dip moment. Why do we buy the dip? Because we knew that the sell-off really didn't make any sense, right? We were told the sell-off was because fears of inflation, and the fears were ignited by the tariffs. But we've seen inflation over 5 years, and the markets went up and up and up. So right away, that didn't make any sense. So I used that information, bought the dip, did very well. I bought a fund, not an individual stock, but a fund, and doing well. So we're going to continue to try to look for opportunities like that just by using common sense, just by what I just mentioned there, looking at the markets and saying, does this sell-off make sense? Should this be a sell-off inducing situation? The fear of inflation. Inflation's been here, and the markets have done fine, folks. So, all right, moving on to some other news here. Let's get into some housing. Some real estate numbers are coming out, and they're pointing to some further weakness in the real estate market. Now, I'm not saying any housing bubble is going to go bust, because what we saw in 2008 that caused the housing bubble to go bust is not happening right now. There's no fears of the banks failing, all right? There's no fears of banks failing. There was back then, so of course everybody got scared. Even the banks themselves got scared, and they stopped giving out mortgages. That's not happening now, but we are seeing a big drop-off in second homes being purchased. Let's go to this article here. And here's how they're putting it over at the Mail. Panic as U.S. vacation rental boom collapses and owners rush to sell at deep discounts. Now, how bad are these numbers, or how good, depending on your view of things, right? If you're waiting to buy a home at a discount, then this is good news because you want the housing market to come down so homes become more affordable. Vacation homes are being dumped at a rapid rate as fears of a housing market crash and a shrinking pool of renters rattle sellers. What did we tell you a few months ago? We said because of all the new administration's goals and new rules that we could see a lot of renters no longer trying to rent because they might be just leaving. The number of people buying second homes has plunged. So it's a combination of weakening rent demand and less people buying second homes. Second homes has plunged to its lowest level since records began and is under a third of what it was during the boom from the health crisis. What did we tell you right here in this channel? Right here in this channel, we told you that the boom was based on manipulation, based on a bunch of rules that were implemented in the housing market that made it to where people wanted to buy homes in rural areas. And then we said the opposite would likely happen when people went back to the office, back to the metropolitan areas. They would see the metro prices go up continuously, but more downturn or more downside to the prices outside of these metropolitan areas. And that's what's happening right now. When you look at the median price total, not just the metropolitan areas, but the total country, the whole country, we're seeing the median home price down about $20,000 from the peak. If you just look at the metro areas, though, because of the demand now, people going back into the cities, prices are still rising. And I believe 19 of the top 20 large metropolitan areas, by rising, I mean they're still up year over year, right? So put that into perspective when we talk about this housing market news. Right, but other factors are playing into this decline of people buying second homes, and these are broad factors that also affect other homeowners and people looking to buy homes. That's the high cost of owning homes because high insurance costs. We all knew that was going to come, and it's likely going to get worse. Higher mortgage rates now, between 6.5% and 7%. It's been bouncing around here over the past 6 to 12 months. Soaring maintenance costs, right? A new air conditioning system now. And now add on top of the higher costs with the tariffs, new roof, new materials, cost of lumber going to be going up because we get a lot of lumber imported. It's going to get higher, folks. So people are seeing the cost of ownership. They're seeing these other threats that could bring on even higher prices down the road. And they're afraid to buy a home right now, especially a second home. And according to Redfin, vacation homes, aka second homes, made up just 2.6% of all mortgages issued last year in the U.S., calendar year 2024. That's according to Redfin, and that number, 2.6%, is about half of what it was in 2020. So there you go. Will it have a big impact on the housing market? Will we see an even bigger drop-off in the sales number that's already plunged to about a 40-year low? Also, something that I don't think enough people are talking about is the outrageous HOA costs. The cost of HOAs, folks, is HOAs are for profit, right? Because they have people they have to pay. And a lot of times what they're doing is they're giving contracts out to people that give them special favors in some cases, not always, but we've seen those types of stories come out. And a lot of motives come out of HOAs that aren't for the betterment of the people in the community that pay the HOAs. I'll leave it at that. But HOA costs are skyrocketing. I talk to clients many times, even recently, saying that their HOAs have doubled or even tripled over the past 10 to 15 years, in some cases even more. I've heard reports of where HOAs doubled in like 2 to 3 years. Especially over this past 2 to 3 years with the rising cost environment and inflation situation that's been happening across the country. And also here's another factor playing a little bit into the housing market. And here's how they put it again over at the Mail. Boomers rush to dump second homes that are by the sea in a mad scramble for cash after huge stock market losses. Now, especially places that are prone to natural disasters. I mean, you have all these risks now owning a house, and you look at a place like Florida, you've got the natural disaster, hurricane risk. You've got now, of course, the HOA is going up, the insurance going up because of the natural disasters and other factors, general inflation as well. People are starting to look at real estate now as more of a liability versus an investment. There's a lot of risk there. Second homeowners in Maine are racing off to offload their properties. Another area that's got waterfront properties, spooked by fears of a house price crash and anxious about their financial future. That's another thing. We're seeing the crash word come up again when previously there was very low risk of a crash. But now with all the stuff happening, people are fearing there will be a crash. The shift is especially striking in a state that once topped the nation for vacation ownership. That's Maine. Nearly 1 in 5 homes in Maine were second residences in 2019. Yeah, Maine gets pretty cold, so people like Maine property in the summer. It's more of a summer place to go for people. And then they go back to the south typically for the winter. A lot of them, not all of them, but a lot of them. And here's one example out of Portland, Maine. People's funds are way down, and they have this other asset they want to cash out. Listings have tripled from just over 1,000 to 3,000 at the end of March, and most of them are vacation homes. That's just Portland, Maine. Tripling of the inventory there in that city, and across Maine, we're seeing a big jump in homes being listed. All right, folks, make sure you have that notification bell on. I'll keep you updated on the trade talks and not just what's going to come out in the headlines, possibly today on Monday, but the real situation behind the headlines. Remember, we don't just read the headlines and believe it. We look at it with common sense. We look at historical data. We look at current data, and just common sense, and we figure out what's going on here, folks. So make sure you come back. A couple more things before we wrap up, folks. The eviction situation, as I said, would happen, just got a lot worse, and we're seeing record-setting evictions in now so many different cities. I can't even count. I'm doing searches here every day and coming up with stories of record-setting evictions in many different cities. And here's a couple things that go along with that. We're seeing more of this. 6 dogs rescued from a Las Vegas apartment unit after owners evicted. When these evictions happen, we're uncovering a lot of bad things in these apartments. And this is just one of like hundreds of stories I've read about pet neglect, which is pretty sad. Like, who would want... Having one pet living in an apartment is tough because if you don't have a backyard, if you're on the bottom floor, maybe you'll have a backyard, balcony, patio, or something like that. But typically an apartment, no backyard. Who would want a pet in that situation? You always have to take the pet out if you're a good pet owner. But if you're not, some of these people are leaving their pets at the apartment and just vacating the apartment. 6 dogs were left abandoned in an apartment after their owners were evicted. It was uncovered on Wednesday by local animal advocates. Nevada SPCA said in a news release. Right, so they rescued these dogs. Who wants 6 dogs in an apartment? Why would you even take on this task? The animals were living in extremely filthy conditions. The dogs were undergoing medical evaluations, getting evaluated. So that's one story. Here's another one. Just in the last couple of days, folks. These are coming out every day. DMPD says a woman abandoned pets, one who was found no longer among the living after eviction. Des Moines, Iowa. Des Moines woman has been arrested, multiple charges. Madison Cherry, shame on you. Right, if you can't handle pets, first of all, if you live in an apartment, it's probably a good idea not to get a pet, right? Because they're so difficult to take care of. And if you can't pay your rent, do you really want to take on the task of feeding an animal, right? So these people obviously have financial troubles. They're being evicted. And maybe it was just a recent job losses. We're not saying that they're long-term income challenged, or if it was just some recent event or layoff or situation that made this happen. But at least do the right thing and take the animal someplace where they could be cared for. 23-year-old is being held on 2 charges of abandonment of cats and dogs with serious injury, and animal neglect, serious injury. She also was charged with 1 count of animal neglect, and she was arrested, right? So A lot of bad stuff happens with evictions, right? I'm not saying that I want evictions to happen. I'm just saying that the whole rental market has been propped up on freezing the evictions. So at some point, you have to let normal economic occurrences happen. You have to let them occur. Otherwise, you're going to see pricing misalignment never ending, right? So you have to let bad things happen in order for these markets to correct. We saw it in 2008 when the housing bubble went bust. People lost their homes. But as a result, prices went down, and some people that couldn't afford a home then could afford a home. I bought a home in 2010. Lucky for me, the housing market came down. If it wouldn't have came down, I might have never been a homeowner at all, right? So what's bad for someone else is good for someone else. And that's why you can't just look at all this information as either bad or good news. It depends on your perspective. I see comments all the time about, you've got nothing but bad news, you've got nothing but bad news. But the same story or the same episode of this news report here, Bull Boom Bear Bust, someone else might say, thanks, this is great news, I needed this is great to hear. It's all up to your, it's your opinion, it's your situation, it's your perspective, right? Perception is reality. How do you perceive this news? And that's your reality, but your reality might not be someone else's reality. Everybody's different, right? Obviously. Here's another one here. Speaking of evictions, Tulsa faces crisis level eviction situation due to federal uncertainty. That's another thing too. We had a lot of federal funds going to affordable housing, right? How many more people would have been homeless if it weren't for the federal funds? Now we're taking these funds away, not just from affordable housing programs, a lot. Food programs, we're seeing reports of food pantry shortages now, and even schools. Food shortages at schools because of the cuts. And we're just getting started, folks. Nobody knows how this is going to end up, but you're going to be ready for it because we're going to be on top of it. As always, keep stacking. We'll talk to you very soon. We'll keep you updated on the tariff situation. Don't just believe what you read in the news, folks. Come back to this channel. We'll tell you what's really happening. Bye for now. Peace.